Hi everyone, and thank you for tuning into my channel where I talk about stocks, the stock market, and investing. I post videos daily, so if this sounds like something you want to get more of, subscribe down below. In today's video, I'm going to be talking about eBay and one green flag the company has going forward. Of course, eBay's business thrived at the pandemic's onset when we were spending more time at home. Brick and mortar stores were closed temporarily, and we were making more purchases online. However, since economic reopening has gained momentum, eBay's sales and customer growth has been struggling. And what I have here is its most recent quarter's financial highlights. You see here that gross merchandise value or the total value of sales on the platform decreased year over year by 18%. Um, Better than expected. Expectations were for that to fall between 18 and 20%. And revenue fell by 9% year over year in its most recent quarter. So, last year, people were spending more money online. That was helping eBay. And now that people are going out more often, spending more money on away from home experiences, eBay's business is experiencing a slowdown. That said, there is a silver lining for eBay, and that's the green flag that I spoke about in the introduction. Now, remember, eBay is an online platform, auction site, and e commerce sales, but eBay does not own any of the inventory on its platform. Instead, it just brings together buyers and sellers and encourages them to make transactions. It encourages those transactions by providing the infrastructure and the support for these transactions to take place. You might imagine when a buyer is entering into a transaction with a seller online, the worry is that the buyer is going to send money to the seller and not receive a product. And so eBay works to remove that friction between the buyer and seller by offering some protections for the buyer and having a rating system where sellers have feedback and ratings so that buyers can see previous transactions these sellers have went into, and in that way develop some trust in from for sellers by the buyers to encourage transactions. And so this is that with those transactions, this is where it eBay records it as GMV, gross merchandise value. And you could see in the first quarter of 2021, when people were spending a lot more time at home, these totaled $24.1 billion overall. And that was 29% higher versus the levels in 2019 before the outbreak. So they got a huge boost from mobility restrictions and stimulus money, but those benefits started to wane as the reopening gained momentum. So in the second quarter 2021 fell to 22.6 billion, 19.9 billion, rebounded a little bit in the fourth quarter 2021 because of the holiday season, and then has fallen again for two consecutive quarters. Overall, in the second quarter of 2022, total gross merchandise value was only 5% higher versus the 2019 level, which is consistent with eBay's growth. eBay is not a fast growing company. It does not grow revenue at an accelerated rate. It relies instead on growing earnings per share at an accelerated rate. It keeps its costs low. One way it does that is by, like I mentioned earlier, it doesn't buy any of the inventory on the platform. It also leaves fulfillment and shipping and handling to buyers and sellers, so it doesn't operate any of those expensive logistic networks. And in that way, it's been able to increase earnings per share at a healthy rate over the last decade. Okay, so now let's get to that green flag that I mentioned. And here you see it in their revenue figures, because even though gross merchandise value has fell by double-digit rates, 15%, 14%, 17% here, 20%, 15%. Revenue has actually been relatively stable. eBay actually increased revenue year over year in the second quarter, 11%, in the third quarter 2021, 10%, fourth quarter 2021, 5%. It only recently fell in the first and second quarters of 2022, but only by 5% and 6% respectively. How was eBay able to do that? Because of this figure down here, the transaction take rate. I noted earlier that eBay does not own the inventory. It takes a fee on each transaction. So what eBay has been doing is increasing that fee that it charges sellers. You see, from the first quarter of 2021 out to the second quarter of 2022, eBay has increased that transaction take rate from 10.3% all the way up to 12.4%, a 210 basis point improvement, or in other words, roughly 20% higher than what it was charging sellers a couple of years, a little over a year ago. Now you might say, well, if eBay is charging sellers more to be on the platform, aren't sellers going to be upset with that and move somewhere else? And that would be a reasonable assumption to make, but sellers have fewer better options. Amazon has increased the fees that it's charging sellers also. And another one of eBay's primary competitors, Etsy. Look at Etsy's transaction take rate here. In the middle, we have in orange, they have the revenue, and in the black, they have the take rate. 17.4%, 17.1, 17.1, 17.8%, 19.3% transaction take rate that Etsy is charging sellers. Compare that with eBay, which is 12.4%. So even though eBay has been increasing this transaction take rate, arguably it has room to continue raising it because one of its main competitors, Etsy, is all the way up at 19.3%. Amazon is arguably even higher than that when you consider the all-in costs. And so, yes, sellers are not going to be happy about this increasing transaction take rate, but they're going to have to just bear with it because they don't have much better options. So this can be a huge green flag for eBay going forward, even though they're going to face headwinds from customers not shopping on the platform as often, spending money on away from home experiences. This is one factor that can be a green flag for eBay. So good news for eBay to somewhat counter the effects of economic reopening, something for investors to pay attention to for the next quarters. All right, so thank you for watching, and I'll see you next time.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.